Hello. Welcome back to Invest with Intention YouTube channel. If you are new here, welcome. I am on a mission to turn 13,000 into 50,000 by investing into ETFs, index funds, and high conviction stocks. And today we are comparing two powerful dividend ETFs, JEPQ versus DGRO, to see which one might be the better buy depending on your goals. We are going to compare their year to date, 1 year and 3 year returns, as well as their dividend yield. Okay, and trust me, the results might surprise you. Before we jump in, I want to say thank you to my first 42 subscribers. I truly appreciate you helping this channel grow. If you haven't subscribed yet, please consider subscribing. It costs nothing but helps this channel reach more people. And as always, this is not a financial advice, so please do your own research before buying anything you see on my channel. All right, let's dive in. Okay, so we will define what JEPQ is. JEPQ is a covered call ETF from JP Morgan. It focuses on large cap and growth companies while generating income through options, which is how it produces those high yield dividends. Okay, now let's go over here. We'll take a look at DGRO. Is a dividend growth ETF from iShares. It focuses on companies that consistently grow their dividends over time, meaning lower yield today but potential for stronger long-term compounding. Okay, so let's go back to my portfolio and we will look at my position for JEPQ. Okay, so let's see. I started my position on March 18th 2025 with just one share, as you can see over here. Since then I have dollar cost average, sometimes buying fractional shares, as you can see here, right? 0.3 share, okay, 0.5 share, 0.5 share. It didn't matter how much I can buy, right? I just dollar cost over time. Here 1 share, 0.6, 0.2 share here, 0.4 share here, okay? And that's how I got to 20.7 shares, okay? My average cost price, as you can see up here, is $56.20, okay? And the current price is $58.42, okay? Which means I am up almost 3%, as you can see over here. JEPQ makes up about 4.78% of my entire portfolio. Okay, so this is where JEPQ really shines. Okay, so watch this. My current dividend, the current dividend yield for this ETF is 10.5%, which is huge, right? So if someone had, let's say, invested 100,000 into JEPQ, that could be roughly like close to, at the current share price, $58. That could be close to 18,000 in dividends per year before taxes. Okay, those are huge. Okay, so with my current shares, I earn, let's go, I'm going to show you how much dividends I am earning right now per year. Okay, so let's go over here. So look at my JEPQ position, the 20.7 shares over here. With that amount, I am earning, look at this, $127.57 per year in dividends before taxes. So which is about 10, and they pay their dividend monthly. So I'm earning like $10.63 cents per month. Okay, those are big. Since JEPQ dividends are non-qualified, they are taxed as regular income, which is why many investors hold this in tax advantage accounts. Okay, so I want to take you over to DGRO, so we'll look at it. I don't currently own this ETF. Okay, the current share price is $73.95. Okay, as you can see here, the dividend yield for this one is 1.96%. Okay, that means annually they pay out $1.45. Okay, and the dividend growth stands at 4.73%. they pay out their dividends quarterly, as you can see over here. Okay, so that's not too bad. The yield is much lower, but the dividends are qualified, meaning better tax treatment if you held long term. Okay, DGRO focuses on steady dividend growth and stability. Okay, so we are going to go to portfolio slab now, and we are going to compare their year to date, 1 year and 3 year returns, and maybe 10 years for DGRO. So here we are at portfolio slab, and we can see that JEPQ year to date has returned 1.41% compared to 6.42% for DGRO. And we'll see that 1 year return 14.30% for JEPQ, 19.35% for DGRO. Okay, and 3 year return 23.28 for JEPQ and 15.65% for DGRO. Okay, JEPQ hasn't been around that long, so they don't have 5 and 10 years, but DGRO 5-year return is 12.15 and over 10-year average per year 14.44. Those are huge returns. Okay, so DGRO is more stable, okay, and better tax treatment, lower yield but strong growth consistency. Okay, JEPQ, let's go back to my portfolio. JEPQ, on the other hand, is much higher income, monthly dividends, more attractive for income focused investors. So which is the better buy? Personally, I prefer JEPQ. Okay, because I like the high income and monthly cash flow. But honestly, both ETFs are great depending on your goals. If you want income now, JEPQ is definitely your go-to. If you want long-term dividend growth, then is DGRO. Okay. If you enjoyed this video, please subscribe, like, and share. It helps this channel grow. And so go ahead, take a second and subscribe to this channel. Thank you so much for watching, and I'll see you in the next video. Bye bye for now.